Welcome to Financial and Managerial Accounting with Professor Boylan. I'm Carrie Lewick from the Office of Professional and Distance Education. This course is part of our distance education program where students from around the world earn Rensselaer degrees and certificates through distance technology. We have students joining us from Con Ed, Ford, Northern Virginia, General Dynamics, GE, GM, IBM, Lockheed Martin, Pitney Bowes, UTC, and individual students. I would like to remind the on-campus students to speak clearly and loudly for our mics to pick up your voices. Your comments and questions add to the discussion that the distance students would like to hear. Also, distance students, your comments are equally important, so feel free to call into the classroom or speak up on the video conferencing. Since this course is being videotaped, a copy will be placed on reserve in the library. On-campus students, please feel free to use this service if you need to make up a lecture or if you'd like to review a lecture. Rensselaer finds this an exciting way to bring quality education to working professionals. The Office of Professional and Distance Education will work with you throughout your educational career. If you have any questions, please call your point of contact. We wish you a successful semester, and now I'll turn the class over to Professor Boylan.
Got it covered. We're okay. Welcome to accounting. Let me reiterate a couple things that you just heard. One is that we have students that are taking this class in a number of different venues. We have about 30 people in class right here. But if you look at the screen behind you, you see people who are taking this class live from Sikorsky. Now, they are seeing us two-way video. I can see them, they can see me. But the way the technology works is, unless they speak, which I'm about to ask somebody to do right away, will someone at Sikorsky please say something? Sikorsky, please say something. So the technology works great. The management of the course sometimes leaves a little bit to be desired. And the way the technology works is if they speak, they will come in and they will actually be able to talk to me. And we'll be doing that many times, many times per class, hopefully, but certainly many times during the semester. So what we have is a situation where people are viewing this class, some two-way live, which you're seeing, which obviously doesn't work very well. The second way people are seeing is they see one-way live video. They see me, but I can't see them. However, they can call in to me, and the people in the back will let me know when they have questions. Right? The third way is through, we tape this thing and we send it out. Ford and GM in particular, they do everything by tape delay. So they don't get to ask questions live. They pelt me and the TAs with questions after the class. They have it. We deliver it. We send the tape to various sites of GM, various sites for Ford. Then they view the tapes and they ask questions, things like that. Now the last way we do this, and this is important for you, right, is the fact that we're going to be video streaming this class as well. Now what that means is that should you miss a class, which I recommend, given there's N seats and there's N plus 5 people in this classroom, right, that what that means is that you will be able to view this class basically 24/7. All you do is log on to the website and then you can view this class through video streaming. Now it's not going to be delivered live. In the past, we've delivered these things live. This time, we're not delivering it live, but, I guess about a day or so after we have delivered this class, so say we deliver it on Monday, from Tuesday on, you'll be able to see this class, at home on your computer over the wire. Any questions about that? Hello, Sikorsky. Let's check out how this technology works. Will someone sign in, please? Okay, who's in charge out there?
Is Sikorsky?
We can hear you. Who's speaking?
This is John Kazor.
John, welcome to the class. How many students are taking it there?
5.
That's what it looks like. I just wanted to make sure. Thank you for speaking up. So anyway, that's how this works. And what we're going to find is it's a little bit frustrating because there's a little delay, but we're going to try hard to get people, for instance, people in this course. Again, there are, I think, 5 or 6 other sites. We'll try to get them involved. Okay. Let's first introduce a couple of TAs. We have 2 TAs for this class. And the first one I'll introduce is Stacy. Come on up here, Stacy, just so everyone can see you. This is your a few minutes in the sun. Now, Stacy is going to write down her email address, which is going to be viewed on the screen very shortly. And the best way to contact us, we're going to have office hours. Each one of us is going to have office hours. There's 3 of us altogether. But probably the best way to communicate is going to be over email. And
What? My finger.
Too big. We're goofing on people. This is her first try, so we have to make fun of her a little bit. Never been on TV before, she told me. And I said, aha, have I got a pleasant experience for you. Okay, Stacy, pronounce your last name for us.
Watazik.
Okay, Stacy Watazik has been an accounting student of mine for about 3 years now. Is a phenomenal accountant. She's going to be a big help to anyone here who needs to learn accounting. Anything you want to say in particular?
Not really. I'm still trying to nail down when I can have office hours because right now I haven't nailed down my own schedule. So once I do that, if Bob gives me an email list, I'll send that out or let him announce it next class.
Okay, thank you. Sanjay, same deal. If you would come in, introduce yourself, say a little bit about who you are maybe, and then write down your email address. Again, this is mostly so everyone gets to see you in action.
Sure.
It's awful quiet. Maybe you should be talking as you're writing.
Yes, 2 minutes. Okay. My name is Sanjeev Bhardwaj, and I'm a first-year MBA student. And my office hours are from 4 to 6 p.m. on Wednesday. So you're free to come down and ask questions. Okay.
Now, Sanjeev is a real unique property of the School of Management. He already has a PhD. So he has a very strong technology background and very good quantitative skills. Now, where will these students be having their office hours? And they'll each be working out of my office, which is a Pittsburgh building, room 1118. They have me stuck down in the basement in the mole hole, basically, is where I am. Now, what's the telephone number for the TAs? The telephone number for the TAs is what? It's 276-3190. So during the office hours, and Sanjay's office hours are going to be Wednesday from 4 to 6, you can contact him at that telephone number right there. Any questions about that? And the same thing when Stacy's working, right? When Stacy's working, you can contact her either at her email address, which she wrote right here, or at the 3190 number when she is having office hours. Questions so far? Now, everybody should already have, and you guys are free to leave. Thank you very much. Everybody should already have a syllabus and problem set number 1, or not problem set, notes number 1. Now, the way this course is going to work is that my expectation is that you will need to bring my copy of the notes to class every day. Now, today I handed them out. This is the last time I'm going to do that. From now on, you're going to have to go to our website and download a copy of the notes. And what you're going to find at the website is there's a lot more material. Some of it's being put on as we speak. Some of it's already there. Now, again, what you're going to need to bring to class, and you'll see what I mean as we go on with today's class, is you will need to have the notes. So, the first thing you want to do is go back and download notes for chapters 2, 3, 4, 5, whatever you can get your hands on. I think we have the first half of the class, all the notes for the first half of the class are already on the website. And we'll talk about where to find it in a couple minutes. Now, what I thought we'd do is we'd talk a little bit about what's on the syllabus. So if you have the syllabus, you might want to follow along with me. Do me a favor, would you close that door? Course materials. The primary course material I think you're going to find are the notes that I have prepared for you, which are going to be free to you. And what I've prepared is a separate set of problem sets, which again are all going to be available on the website. So that really is the heart of the course. Now the things you have to purchase are the textbook. Now the textbook is very important for people who do not have a strong business or accounting background, which is most of you. So this gives you a lot of background material. The second thing that you need that is in honesty a little bit optional is I provided or tried to make available the solutions manual which are the answers to the questions in the textbook. And as you'll see, I assign a lot of questions. My opinion is the way to learn accounting is through problem solving. And so I assign a lot of problems from the book, and I also have these problem sets made up. And so my advice to you is to treat this course as a problem solving kind of orientation, that you don't want to think about it as a liberal arts course. It's not a sit back and think about accounting kind of course. It's a kind of engineering related kind of course where the best way to learn is to work through the problems and use the terminology and understand what we're talking about. In addition, the solutions manuals, I made them mandatory on the syllabus and on the as far as the textbook vendors are concerned. However, to be honest with you, it's not really mandatory. And the reason we do that is because firms will not reimburse their employees unless it's mandatory for the course. So I make everything mandatory, but then before you go and buy it, I tell you, if your firm is not reimbursing you for this, don't buy it. Okay, so that's my advice to you. If you can get reimbursed for the solutions manual, buy it. If you cannot get reimbursed for it, then don't buy it. The last thing is that near the end of the course, we're going to be doing some case analysis. And we have 4 cases that are Harvard Business School cases that come in a packet that I'd like you to buy. So the 2 things I'd like you to buy at a minimum are the textbook, unless you have a pretty good background in business and a pretty good background in accounting, and the course pack of cases from Harvard Business School. Now, in addition to that, if you can and get reimbursed for it, it makes sense to buy the solutions manuals. In addition to that, the freebies, which is where you're going to probably spend most of your time, are going to be the notes you're going to download and the problem sets you're going to download. Any questions about the materials?
Yeah, are the cases available at the bookstore right now?
Should be.
They haven't come in. No.
No. We're trying. Yeah, I thought they were, and I apologize. I didn't check that. Any other questions I can't answer?
Professor, you follow the notes and we got to go through the textbook to get the internal or any concepts now, right? Like any of the theoretical concepts we got to go through the textbook. Or you follow your notes that is there on the web and that's...
I will only test you on what we do in class.
Okay.
First of all. And what we will do in class comes directly from the notes. Now, if what we're doing in class doesn't make sense to you, then it becomes time that you need to do some background reading. So my opinion about how you should spend your time is, and I'm probably the only professor who will ever tell you this, don't read the textbook. Okay? So my advice to you is don't read the textbook unless you have to. So you come to class, if you understood what we did in class, go to the questions in the back of the chapters of the textbook. If you can answer those questions, don't read the textbook. If we did something in class and the terminology just doesn't make sense to you, now maybe you should backtrack and fill in some of those blanks by reading the textbook. So, I mean, hopefully that answers your question. This is not, to me, I'd rather you spent your time on problem solving because I think I can explain to you what's going on in accounting. But only you can understand how to use it by doing the problem solving. So my prejudice is that it's much easier for you to listen to me than it is to read a textbook. And from there, you take it and use it. Questions? Grading. What we have are 3 opportunities. So I'm on the next page. And the 3 opportunities are a midterm and a final. And we need to discuss when we're going to have the midterm. The final is going to be held during final exam week. So, you know, if you have scheduling problems or you have travel that's coming up, you should be aware that the final exam is going to be given without doubt during final exam week, which is more or less the week after classes end, give or take a day or 2. And the midterm exam is going to be either the week prior to spring break or the week after spring break, and we can negotiate that as we go along. I'd like to get that nailed down by the next class. Now, incidentally, when is the next class? Is it next Monday? No. So Monday a week from today is a day off. So our next class is 2 weeks from now. So you come to class next Monday, you get an F in the course. So back to the grading. We have 2 major grading opportunities, which is the midterm and the final, and there are 2 projects. And the first project is an Excel-based modeling project. It's a situation where you're forecasting financial statements, income statement and balance sheet for 5 years. The second project is a project where you are analyzing a case. So one of those 4 cases that we have listed there, we'll analyze 3 of them in class, plus a few other cases along the way. And then you will have the opportunity to analyze 1 case on your own. Now, the percents that I give you on this thing, which is that the midterm will be 35%, the projects will be each 10%, and the final is 45%. To be honest with you, I don't stick to those percents. And what I do is if someone does relatively poorly in the midterm but does relatively better in the final, then I make the midterm worth 10 or 15% and the final worth more. Conversely, if someone does very well in the midterm but then is sick for the final and does poorly in the final, I change the weights to give you the benefit of the doubt. Similarly, if you do average in the exams but you do sterling papers, that counts for more than 20%. I mean, I'm looking for a way to make sure you communicate to me that you understand accounting. And if you can do it well in the exams and on the papers, that's phenomenal. That's an A in the course. However, some people don't take exams well. It's just how life is. So if you do a sterling job on the 2 projects, the 2 paper kind of things, that counts for a lot, in my opinion. So I will change the grading to give you the benefit of the doubt relative to what you do best, which could be what? Either exams or papers or whatever. Any questions about that? My office hours. I'm going to be around Mondays, and I've had to change them. I probably won't be around until about 4 o'clock. I have a 3 o'clock meeting. So my office hours, even though on the syllabus it says 3 o'clock, probably won't be there till about 4:15. But then I'll be there till about 5:30. So I'll be in my office before I come over here. So from 4:15 to about 5:30, 5:45 would be a great time to catch me. I'm almost always going to be in my office then. Now, if that time isn't good for you and you want to come and talk to me, give me a call. I'm happy to meet with you anytime. People off campus, you know, if you need to get a hold of me, email me, tell me you want to talk to me at some particular time, and I'll be happy to make sure I'm available. So, you know, I want to talk to you. I want to help. But my experience is that office hours are not a real good use of our time. Last thing, spreadsheets. Now, what I'm going to do is I'm going to encourage you to bring your computers to class, and I'm going to encourage you to use your computers whenever possible. And what I will try to start doing early in the semester is try to start using Excel in particular. And what I'd like to do in this class is use Excel as a modeling tool. Now, in financial accounting, I'll show you some of the things that I do in financial accounting, but it's going to be much more important in the managerial accounting part, which is the second half of the class. So, I encourage you, we don't need them today, and we may not need them next class, but hopefully at the end of the second class or in the third class, what we're going to do is I'm going to pull up Excel on the computer, and I am going to show you the kinds of analyses I do using Excel, and hopefully you will learn a few tricks from me. If you have tricks I don't already have in my tool bag, you show me a few things, and hopefully, we learn to use Excel, because I think that's the tool in business. That's the tool for analysis. Now, to that end, both of these projects are going to force you to use Excel. So if you've never used Excel, I'm about to drag you into this kicking and screaming. So be aware now that it might make sense to start learning some Excel on your own or however you want, because it's going to be something we're going to be using both in class and what you'll need for homework and things like that. Next page. I thought I'd give you a clue as to the hieroglyphics on the notation I use in this particular. Now, can you zoom in on this, please, Brad? Hello? Can you zoom? There we go. This is the syllabus that hopefully you have in front of you, which is going to be hard to read, I recognize. Now, the first, it says week number 1, opposite to 1, basic accounting concept. That's my notes number 1, right? So the reference there is to my notes number 1. Chapters, these chapters are chapters in the textbook. So my notes number 1 cover, in my opinion, more or less material from chapters 1, 2, 3, and 5 in the textbook. Now, in the textbook, there are problems and there are exercises and there are cases. Right? E1:1-6 stands for the exercises in Chapter 1, exercises 1 through 6. E5:6 stands for the exercises in Chapter 5, exercise number 6. P1:3 stands for problems in Chapter 1, problem number 3. Does that make sense, everybody? Now, lastly, there are some cases. C stands for case. So this is case Chapter 1, number 1, and case Chapter 2, case number 1. So those are the questions I'd like you to look at with respect to the material that we will cover in class today. Any other questions about?
Are the problem sets graded, or are we going to go over them in class?
The problem sets. Problem sets, I'm going to give you the problem sets and the answers. So we're not going to grade them. Now, in addition, what we have is during the summer, I videotaped between 45 minutes and an hour on each problem set. And so what we're going to have is videotapes separate from the video streaming of the class. We're going to have videotapes of me solving problems from each one of these problem sets. And that's all going to be on the website. It's not on right now, but it will be shortly. So that we will not be doing much of this in class. If necessary, before the first exam, we may set up a problem-solving session, which one of the TAs or I will do. But I don't think that will be necessary, because I spent a lot of time, I think, working through enough of these problems that you're going to get the general idea. Now, the problem sets, and there's 6 of them, each one of those questions on the problem set is an old exam question. And I will also make available a lot of old exams, which I will not give you the answers to. I'll give you the answers to the problem sets, but I will not give you the answers to the old exams. And what you're going to see is the question on the problem set is very similar to the question from every one of the old exams, right? I mean, all my old exams look very similar. They have the same kinds of questions. All I do is I change the name of the company, I change the numbers, right? I give the same questions every year, every midterm exam, every final. I have about 15 questions, of which I pick 10 for each. So, and that's how this works. So, and that's why I say you want to spend your time problem solving. Because if you learn how to do the problems in the problem set, I guarantee you're going to see those problems on the midterm and on the final. So it's worth your time. Questions? Yes. Good question. I don't know if this is going to work. We were technology challenged earlier. Here we go. Let's see. Can we go? Can you bring up the? Can you see that? Not at all. Okay. Yeah, it's kind of this. Nothing seems to be working all that well. The website that I'm coming in through is www.pde.rpi.edu. Let me say that again. www.pde.rpi.edu. Now, if you can get to there, you can probably find your way into this course. Okay. Now, this particular site is a few screens in, and I'll get you in from another direction as well. But basically, what you will do is you will then go and look for Management 6019, which is not that one, which is this one right here. So I'm double-clicking. I hope you can you see this enough? So I'm double-clicking, and this is Financial and Managerial Accounting. Now, if I go to and I call it FMA. So I go to the FMA homepage. I'm right here. I go to the homepage. Now it asks for a user ID. And for each of you, your user ID, what is it, should be your next question. And the answer is your user ID is your RCS ID. So that's your ID, RCS, which is our computing system, whatever your email, I guess, would be another way to put it. And your birthday, so your password is your birthday, which would be, let's see, how do we do that? That's yeah, M. So month first, then day, and then year. Right. So it's your user ID. Your RCS ID is your ID in this thing, and then your password is your birthday with 2 digits each. Does that make sense? Now, for some of you that's not going to work. I guarantee, right? For some of you that's not going to work. And for those of you for whom it doesn't work, we have what we call a guest ID. And so if you go in and you try to get into this site and it just doesn't like you, and for some of you, I mean, I already don't like you. So the website's just as likely to not like you. So for those of you for whom that happens, the guest ID is PDE_guest, G-U-E-G-G-U-E-S-T. That is both your password and your ID. So if you go PDE, which is Professional Distance Education, right? That's where PDE comes from, _guest, both as your ID and your password, you should be able to get it. Now remember, you will need to get in there to download the notes for next time. So, you do need to get in there between now and the next class. Second thing is, if this doesn't work, right? If your ID doesn't work and you have to use the guest ID and password, then you need to let somebody know. And that person is Eleanor Cupp. And her email is cuppe@rpi.edu. Right? So, Eleanor Cupp, E-L-E-A-N-O-R, Cupp. Now, while we're at it, do you know the way RPI usually does your IDs? Everyone understand that? If this is your first class, right? CUPPE, they take your last name, add your first initial. So if you meet someone for the first time, you're trying to figure out what their email address is, things like that. At RPI, it's their last name for the first 5 digits plus the first digit of their first name. It's the usual convention. Now, that's not mine, of course, because I changed it to confuse the innocent. Now, let's see if, in fact, this this thing will work. So it's PBE underscore GUEST. And then, where am I? Okay, be like that. PDE underscore GUEST. And I'm in. Voila. So that one works. Right? So you all should be able to get in. Now, let's see what we have. There's a bulletin board that is available if you want to communicate to each other. I have found that personally it's not particularly useful. I mean, I spend a lot of time answering emails. We have 2 TAs, so we will talk about how to use that in the future. Course syllabus is what I already handed out. You've already seen this. Notice my email is my last name, Boylan, @rpi.edu. All the other details are there. You can figure that out as you go. Let's get rid of this. Course notes. What we have right now are Chapter 1, which you already have, so you don't need it. Chapter 2, 3, and then 12 and 13. Now, in the next couple days, chapters 4, 5, 6, 7, blah, 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 they're all going to be on there because Eleanor, who actually manages this site, already has all that information. It's just not up yet. So it will be up very shortly. So if you go on tomorrow or the next day, you should be able to download virtually all of the notes for the first half of the course, which is 1 through 13. And there's a few chapters missing because we don't do some of the chapters. My notes cover more material than we do in this class. So I only give you the notes that what we cover in class. Questions about that? Go ahead.
It's the first one up there is chapter 1 notes. Is that chapter 1 of the book, or is that just like
no?
That's
my chapter 1 notes, which equates to chapters 1, 2, 5, and 7, or some
4 chapters in the book.
Something 3 or 4, 2 or whatever. Yeah. Okay. Course calendar. What I've done on course calendar is this is today, and I'm going to try to update this as we go. We're going to do chapter 1 in the notes today. Next week, remember, you come to class, you get an F. 2 weeks from now, my expectation is we're going to go through chapters 2 and 3, and these are the notes chapters 2 and 3, right? And I'm going to try to keep you updated through the calendar on more or less what I think we're going to do, and then I will update it based on what we in fact accomplished. So you will be able to go to the calendar and see what, should you be traveling or should you be doing whatever, you'll be able to see what in fact went on. Last thing is video streaming. And once you're in the site, then you're going to be able to go to this thing. Now, we don't have anything on the wire right now for you to view. But by simply clicking that icon right there, you're going to be able to go through here, and these things will be listed in here somehow. You'll be able to view things, view prior classes. Any questions about that? So, I mean, it's fairly straightforward. You should be able to figure out how to get in, how to download. It's usually pretty user friendly. Yes.
If you don't want to stream it, will there be a copy, a videotape copy made for the on-campus students?
Yes, there's a copy that will be delivered to the library within a day or two of each class. So if you don't want to watch me on your computer screen, you can go to the library and you can watch it over there. The problem is you're constrained in terms of the amount of time you have if you go to the library. And you may even be constrained about being able to bring it out of the building. So there's trade-offs, right? And you decide what's best for you. Am I through with the details? Anybody have any questions?
So the midterm will determine sometime in the next 2 weeks. Is exactly when it is?
Yeah, the midterm. Well, the two dates I've targeted is Monday before spring break or Monday after spring break. And it makes almost no difference to me whatsoever. But if everyone else has a midterm that week, I'm given some flexibility. So next class will determine which of those 2 days that we choose. And once we determine the day for the midterm exam, then that will then determine when the first project is due, because they're both due in the same area. I try to make them do a week apart. So, once we determine what's what, then the other one pretty much by default gets determined. And the final exam is in final exams week, and the final project is due in the last class. So, within a day or two of the last class, you can email it in. So, only the midterm date really is up in the air. And again, I only have that flexible so we can decide based on what's best for everyone's schedule. Questions? Okay, let's do a little bit of counting. That's why we're here. So in the notes, see if I can get this computer booted up here. Well, my computer's arguing with me. Let's go to the notes. I'm on page 1-2 in the notes. First thing, why do we have accounting? And that answer is pretty obvious. Now, you take accounting courses from a lot of people, and they try to convince you that accounting has some special meaning and there's something very clever about accounting. I don't believe that at all. Accounting is just information. And what we're going to find is that the accounting that we do is simply a database. And so all we're really doing is keeping track of information in the database. That's all accounting is. Now, the reason it's special is because it's how firms evaluate whether they did well or whether they didn't do well. It's how firms keep track of what they have and what they don't have. It doesn't comprise all the information in a firm, but it comprises a great deal at its base. It comprises a great deal of the information that is part of any firm's information system. So that, in my opinion, right, the best reason to learn accounting is not because accounting is necessarily the most important thing, but it's important to learn accounting just to make sure someone else is not abusing you with accounting information. So the more you understand about the basic information, the better off you're going to be. Now, who uses this stuff? In this class, we talk about financial accounting, which is where we start. Later, we talk about managerial accounting. Financial accounting is what? That's the way we report information to external parties. External parties like whom? Like banks. What's another external party? Shareholders. That's our primary responsibility from the firm perspective in dealing with their accounting information, is information to stockholders and prospective stockholders. Right? Now, the way we deliver that information, we deliver it through a system of rules and procedures called GAAP. G-A-A-P. And GAAP, and you'll hear me say GAAP many, many times, GAAP stands for Generally Accepted Accounting Principles. So GAAP, again, is Generally Accepted Accounting Principles. Now, in addition to GAAP, and GAAP is how we report information to stockholders. Now, GAAP also determines how we report earnings per share. Why is that so important? Why is this notion of what is earnings per share first and foremost? What is earnings per share? Any guesses?
It's the net income divided by the number of shares outstanding.
Okay. So it's net income, NI. And what's net income equal to?
The gross income minus it'd be the gross income minus the expenditures.
Okay. So net income is all the revenues, all the cash in, so to speak, right? Less all the expenses, which is kind of the cash out. Not exactly accurate, but that's kind of idea, right? The net of the revenues less the expenses gives us net income. Now, earnings per share says if you're a stockholder and you own a certain shares of stock, what's your share of that net, right? So if we take the net income, we divide through by the number of common stock shares. That is earnings per share, or EPS. Now, it turns out EPS is a very important it's a very important thing to understand in terms of our financial economy. And I'm arguing with my computer. I apologize for that. It's not treating me well. Why is earnings per share so important? Well, I'm looking at today's paper, right? This is Monday, January 8th. So I'm looking at today's Wall Street Journal. Brad, can you come in on that just for a second? Now, so in today's paper, I go down to column number 2, and I see here's a company, and it says this company has raised its earnings forecasts in part due to higher power prices in California and the Northeast. Now, what is meant by these earnings forecasts? And the answer is, we mean earnings per share. So when people are talking about earnings this and earnings that, they're always breaking it down by earnings per share. I'll give you another example in today's paper. Delta Air. Brad, can you come in a little better? Delta Air, here. Delta Air warns that earnings would trail forecasts. Now, is that good news or is that bad news? How bad? Potentially disastrous. That's right. But the key thing to remember is that here's a situation where Delta Air has a problem with their pilots. I don't know if you're following what's going on with Delta. Don't fly Delta right now, right? They're having big arguments with their pilots. The unions are squabbling. They've had slowdowns. They've had all kinds. They had to cancel a lot of flights. They've had weather problems. And in any case, they're now saying their earnings are going to take a hit. Well, what that means is that their earnings per share are going to be less than what was forecasted. And what will often happen in the market is that when your earnings don't meet expectations, stock price does what? Stock price goes down. Now, all this earnings stuff is determined by what? Determined by GAAP, right? Determined by these nitpicky accounting rules that I argue, if you understand those rules, you understand better how firms determine value. Because it's these earnings per share, right? It's the earnings per share forecast compared to the actual earnings per share that can cause a $20 billion change in market valuation, right? So if you understand how earnings per share is calculated, you know what net income is, and it's very different in cash flow, then suddenly you have a leg up on how to analyze companies. You have a leg up on other people within your firm on how to use the information, because we in accounting collect it in a certain way. And that's what this class is all about. How do we collect the information? 1. 2, how do we then use the information? So far we've talked about GAAP, which is reporting to external entities, particularly stockholders, but also banks and creditors and things like that. Now, in addition, we worry about tax accounting. So we have GAAP accounting and we have tax accounting. Now, it turns out that GAAP accounting is pretty close to tax accounting. So they are very similar, but there's a few wrinkles in there. And we'll talk about how tax accounting differs from GAAP accounting. Now, here is why that's important. Because GAAP accounting affects earnings per share. GAAP accounting then has an effect on value of the stock price. That's an E. The thing at the end there. That's an E. All right? So is GAAP important? The answer is, well, of course. But now we come down to tax. What does tax affect? Tax affects the amount of cash that we give to the government. So it affects cash flow. Now, is that important? And the answer is, why, of course it is. Right? And so understanding how the tax rules differ for GAAP and from tax gives you some clue about value in the market in terms of the stock market, but cash flow also affects value. It affects whether firms can pay their bills. So again, these two things, again, of reasonable import. Last, what we're going to do in the second half of the class is called managerial. And managerial accounting, quite simply, is the firm collects information to make decisions. There are no rules. There are no regulations. The firm collects the information and analyzes it any way they want, whatever way gives them the best information for decisions. So with GAAP accounting, right? With GAAP accounting, the SEC and various bodies make the rules, and we firms and accountants kind of abide by the rules, and we try to kind of get around the rules, right? For tax accounting, the government makes the rules, and we break the rules because we want to pay less in taxes, right? Excuse me. We stretch the truth upon occasion when it comes tax time, right? And we try to get around, circumvent tax rules to save us cash. But again, they make the rules. We play by the rules to the extent that we have to for taxes and for GAAP. But for managerial accounting, it's a situation where anything goes. All we're trying to do in managerial accounting is collect good information and therefore make good decisions. Questions? What are you going to see in class today? What are you going to see in class today are a number of financial statements. We're going to create financial statements in today's class. We're going to create 3 financial statements. The first one is an income statement. Now, an income statement is often called a P&L. What does P&L stand for? Profit and loss. That's right. So an income statement is profit and loss. And you often hear the bottom line. What's the bottom line? But the bottom line is what? Net income, right? So the old euphemism, well, what's the bottom line? Well, it's an accounting term, right? The bottom line simply is net income. And so an income statement is what? Is revenues, again, the idea being cash in, minus expenses, gives us what? Gives us the bottom line, which is net income. Okay. Questions? Now, the second statement that we're going to create today is called a balance sheet. And a balance sheet is simply a statement or a list of all the firm has. So a balance sheet we'll go into in a little while. The third statement that we're not going to create in class today, but is a very important statement, is called a cash flow statement. Now, a cash flow statement we will be doing in probably class number 8 or class number 9. And a cash flow statement forces us to use all the accounting that we will have learned for the first half of the year. It's kind of the culmination of everything in financial accounting. Okay. Time for some hardcore accounting coming up. You're going to see in a second why accounting is so difficult. Okay. In the notes at the bottom of page 1, top of page 2, there's 3 types of accounts in accounting. And those accounts are assets, liabilities, and equity. Brad, do me a favor. Would you move me to the bottom right? There you go. EQUITY. Now we have this horrendously complicated equation that links all these things in accounting, which is that assets are equal to liabilities plus equity. Now, let's get a sense of some of these things. What are assets? What are assets? How about Renee? What's an asset?
Things of value that the company has.
Things of value. Okay. What's an example of an asset? What's your favorite asset? Cash. I'm gonna like that girl. Cash. Okay. What's another asset?
Receivable.
Accounts receivable. What is an account receivable?
What another company owes you and the person owes you.
Okay, when we make a sale to another company and they say, we promise to pay you, but we'll pay you later. They owe us the money. That's an account receivable. Okay. What's your name?
Bill.
Bill. Bill, what's your favorite asset?
Well, I'd like to think of as an employee as an asset. But
You know,
I would go with...
I would agree with you, but accounting wouldn't.
Right. Oh, I understand that. I would go with computers.
Computers. Toys. Technology. Toys. Okay. Let's call that property, plant, and equipment. All right? Equipment being primarily the toys. Now we're missing one main asset that most firms have. What's that? Inventory. So cash, now there could be many other assets, right? This is real broad. Cash, cash receivable, inventory, property, plant, and equipment, PP&E. Now, did I list them in random order? Do you think? No. Few things Boylan does in an accounting class are random. So, the order in which they were listed is the order of what? What's that called? What? Not order of importance. Liquidity. Right? We list the assets in order of liquidity. What does that mean? How quickly can it be converted to cash? So the thing that's most liquid, obviously, is cash. Accounts receivable, how long should it take before cash receivable comes in the door as cash? 30, 45 days, right? Unless you sell to a big firm, in which case it's 50, 60, 90 days, right? Inventory, we have to sell it and then collect the cash. It takes a little bit longer. Property, plant, and equipment, we usually don't sell those things to generate cash, but we use those things to generate the value in our product. Although at times we do sell equipment or land or buildings or whatever. So it can generate cash directly, but usually indirectly creating value through the products that we, in fact, deliver. Liabilities. What is a liability? How about the back row? Jim, what's a liability?
Accounts payable.
How would you describe it to your grandmother?
Accounts payable?
Yeah, or any other liability. It's what the firm what?
It's what the firm owes someone.
It's what the firm owes. Stop right there. All right? A liability is simply what the firm owes to somebody. It's as simple as that. So accounts payable is an example. Now, again, you don't have to write all these things down because everything's written out for you in the notes. So if that's why I hand notes out. Okay? So I would prefer you sat and thought rather than getting hand cramps. Right? Thinking is, it turns out, in Boylan's class, unlike some perhaps, thinking is encouraged. Okay? Writing, on the other hand, you do that at your own leisure and expense. Now, other liabilities are what? Salaries payable, other kinds, anything blah, 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 payable is going to be our denotation. That's a liability. If it's payable, it's a liability account. And every liability account almost, we're going to try to put payable onto it. So we know, in fact, it's a liability. Now, accounts payable, is that short-term or long-term? Short-term. What's an example of a long-term liability? Bonds. Shaken, not stirred, that vodka martini, right? Or what? Mortgages. Now, what's the difference between a 30-year bond and a 30-year mortgage? Is it possible to have a 30-year bond? Sure. Why not? Is it possible to have a 30-year mortgage? I've got some people in this classroom, besides myself, have 30-year mortgages, or maybe less right now. What's the difference between a bond and a mortgage? And the answer is, a bond, you pay only interest during the life. The firm pays only interest during its life and pays a one balloon payment to pay back all the principal at the end. And there's no collateral. For a mortgage, there's collateral, which is whatever you buy, plus the payments include interest and a reduction of the outstanding balance and principal. So every payment on a mortgage includes interest and principal reduction. Whereas for bonds, the payments are just interest. And there's a balloon payment at the end covering the full amount of principal. Equity.
What does collateral mean?
What does collateral mean? Good question. Who wants to tackle that question? What does collateral mean? Nobody wants that? What's your name?
Art.
Art?
I guess collateral is something you put up in case you foreclose on the loan. In other words, something of equal value to borrow money against.
Did that help?
Why does the buyer not have a collateral?
Okay, it's not that the buyer doesn't have collateral. Let's say if you buy a house, right? The bank forces you to put your house up as collateral. So if you stop paying, the bank comes in and forecloses on your house, sells the house to make good on the debt, right? And so that's what collateral is. It's something of value that whoever lent you the money can then go and grab and sell to make good on the loan. Does that answer your question?
But with the balloon, you borrow the money.
With the balloon, there is no collateral. With bonds, generally speaking, there is no collateral. They're usually unsecured completely. Equity accounts. The two main equity accounts we're going to talk about today are common stock and retained earnings. And again, this is all written down for you. Where am I? I am, I'm on pages 2, 3, 4. So there's no reason to write all this crap down. Common stock. What is common stock? Well, when you buy a firm's common stock, you buy the ownership rights. You become an owner of that firm. And that's what common stock is all about. Now, retained earnings is probably the most complicated thing we're going to deal with tonight. So I'm going to let you know right now, it's a little bit tricky. You'll figure it out eventually. It's a very simple thing, really. Retained earnings comes like this. Retained earnings is the summation from period 0 to whatever today is, called today N, of all prior net incomes less all dividends paid out. So what happens is the firm gets dividends, the firm accrues net income in any particular year, then it pays out a portion of that net income as dividends. And whatever it doesn't pay out, it does what with? It retains. Hence, that is what we call retained earnings. RE. Retained earnings. Now, in the notes on page 4, there's a very short example of how retained earnings work. Now, before we do that, let's go back and remember what is net income again? Net income is revenue minus expenses gives us net income. Right? Okay. And let's go back to our sheet here. Therefore, all retained earnings type accounts are equity accounts, right? Because revenue and expenses all become part of retained earnings, hence would be equity accounts. Okay. Now, with respect to retained earnings, the example, and I'm on page 4, the first year, and I'll go through 2 years real quickly. The first year net income in period 0 is $500. They decide to give out dividends of $200, and therefore retained earnings is going to be what? $300. Now put a nice double line there, I will, to indicate that's the ending balance for a particular year. Now the next year, they have net income of a certain amount, and the net income is 800. But we have to realize that they already have 300 in the till, right? Then of that 800, they end up paying dividends of 400. So the net in the second year would be 400. But since they had 300 to begin with, retained earnings for the 2 years combined would be what? 700. So the increment in the first year was 300. The increment in the second year was 400. You add those increments together to get total retained earnings for the firm at the end of the second year, which is 700. Questions about that? Dividends are an amount that the firm decides it wants to pay out per share.
Based on their expectations?
Based on how well they've done for the year. It's a total judgment call. The firm is not forced to pay dividends. Some firms pay dividends, some firms do not pay dividends. For instance, does Microsoft pay dividends? Who owns Microsoft stock? Nobody in this room. Well, at the moment, I wish I didn't own Microsoft stock as well. Unfortunately, I do. Turns out Microsoft does not pay dividends. They retain everything they earn and reinvest it back in the organization. However, some firms, for instance, tobacco companies and beer companies and things like that, they will often pay out a large percent of net income as dividends. So it depends upon the industry. But it's a decision that's made by the board of directors, how much to pay out in dividends. Well, it is up to the stockholders because if you want a firm that pays dividends, you buy that stock. If you do not want a firm that pays dividends, you buy a different stock. So in that sense, it's determined by stockholders. So only people who want to have dividends buy that kind of a stock. It's kind of people vote by what they buy.
Related to earnings per share?
Absolutely. But I'm not going to tell you how. Questions so far? Accounting's pretty boring, isn't it? It's not so bad. All right. Here's everything you know about accounting. It goes by quickly. There's 2 questions. I'm at the top of page 5. 2 questions you have to ask yourself every time we do anything in accounting. And the first question is, what type of an account is it? Now, when I say what type, what are my options? They're either what? Assets, liabilities, or equity accounts. And it's important to remember the accounting equation, right? Because they're all related. Assets equal liabilities plus equity. So question number 1 is, what type of an account is it? What gets affected? The second thing to keep in mind is, how did it change? By how much did it change? It either went up, or it went down, or it stayed the same, right? How did this thing change? Now, if you keep the accounting equation in mind, right, what that then tells you is if one thing changes, then what has to happen? Something else has to change, or else the equation won't be in balance. For instance, if assets go up, what has to happen? Well, maybe liabilities went up, right? Or maybe equity went up. But in order for this equation to balance, it has to be the case that there are at least 2 accounts being affected every time we record information. Let's say that again. The accounting equation has to balance, always and everywhere. And so when we record information, that means that every time we record something, and this thing is called a journal entry, every journal entry, it has to be the case that the assets are equal to liabilities plus equity, both before and after we record it. And accounting is as simple as that, right? The recording of accounting is as simple as that. If you can remember the accounting equation, and you can identify what type of an account these things are, then you can record anything in accounting, and you are well on your way to figuring out what the heck is going on and why do accountants get paid so darn much. Okay. Let's go back to the accounting equation. Assets equal liabilities plus equity. It's a little complicated. Why? Equity accounts are what? Common stock plus retained earnings. Now, retained earnings includes three types of accounts, right? It includes revenue accounts, expense accounts, and dividends. Questions? The accounting process, back on page 5. The accounting process, what we're going to be doing in class for the rest of the class, goes like this. During the year, we record transactions. Now, if you turn the page for a second, go to page 6. You see transactions 1 through 11. So we first invest some money in the company, then we buy some equipment, then we purchase inventory, then we sell something, then we do this, then we do that. Those are transactions, right? So we record all those transactions during the year. So this is January 1st. The end of the year is then 12/31. Now, 12/31, what do we do? And the answer is, well, at the end, the whole point of this exercise is to create what? To create financial statements. To create reports that managers can use. And the financial statements we're going to create are an income statement and a balance sheet. Now, an income statement is what? Revenues minus expenses. What does a balance sheet look like? What does a balance sheet look like? Assets equal liabilities plus equity. So if we go back to that first page where we're getting to know assets, liabilities, and equities, right? This is a balance sheet right here. Assets equal to liabilities plus equity. So a balance sheet is simply a listing of all the assets, all the liabilities, and all the equity accounts. So that's our goal. We're going to create a balance sheet and an income statement. Now, along the way, we create these transactions. At the end of the day, we then make adjustments. So we record all these transactions, then we make adjustments. Why? Why do we make adjustments? Bill?
Depreciation in your equipment costs?
We might have an asset that we bought that lasts for more than 1 year. So we're going to depreciate it over 5 or 10 or 30 or 40 years. So we are going to then have to adjust the value of that equipment for the amount that it wore out during this period, or at least an estimate of it. So we have all kinds of adjustments like that. Then after we do that, we summarize these things. We make sure everything is correct, in essence. Now, another adjustment could be any mistake we made during the year, right? Next thing we do is we then prepare our financial statements, income statement and balance sheet. And that's what we're going to do. Questions? On page 6. Now, I'm going to ask you to stay on page 6, because I'm going to ask people in this class to record this information. Now, if you turn the page, you can read the answer to me, okay? And what fun would that be? So I'm going to ask you to stay on page 6. If I see you turn the page, I'm going to be very unhappy. So I'm going to start someplace. Who wants to start here? You want to start? Okay, we have a volunteer. What's your name?
Nate.
Nate. Now, the people at Sikorsky, how many people are at Sikorsky again? Sikorsky, would you sign in again, please? Still 5, right? Okay. We're going to take a break in about 10 minutes. When we come back to Sikorsky, we're going to ask you to do 3 of those ones, 3 of the examples here. Now, I'm not going to tell you which 3, okay? But I want you to know it's coming. Okay? But not till after the break. So, give us a start. Go ahead. Number 1.
$600,000 to start a business.
Now, what are we doing? We're creating journal entries, and we're recording the information, and we're using the accounting equation, right? So first question is, what type of an account is that? From the firm's perspective, what gets affected?
They added to their assets.
They added to what asset in particular? What did they get? Screen?
Cash.
Cash, right? So we have assets equal liabilities plus equity. And the first entry is we're going to increase an asset for how much?
$660,000.
$60,000, okay. Now, unfortunately, again, there's no reason to write this down, because, again, if you were cheating and turned the page, what would you find? All the answers, right? It's all written down for you. So I'm asking you to sit and think, not sit and read. So your equation doesn't balance.
Well, they also sold some common stock.
And they sold common stock. And what type of an account is common stock?
It's a
Did they go up or go down?
okay. Went up.
They went up, right? So we increased an equity account called common stock. It went up by $60,000. Notice our accounting equation balances. Assets 60, liabilities and equity 60. Question. Okay? Who's sitting to your left?
Armin.
Armin. Don't look at me like that. It's going to be okay. Okay, Armin, how about the next one?
Purchased equipment which cost $25,000, paid $10,000 in cash, and agreed to pay the balance in 30 days.
Okay, so what type of an account? What did you buy?
An asset.
Okay, what's that asset called?
Equipment.
Equipment, right? So we buy an asset called equipment. So we increase an asset called equipment for how much? $25,000. Okay. Now what else happened? Did we pay for it?
Not all of it.
Okay, how much did we pay?
$10,000.
Okay, now what type of an account was that? What we paid? What did we hand to that? We paid. What kind of account is that?
Cash.
Cash, and okay, so that's the liability and equity account. Cash.
An asset.
Okay, so an asset account called cash went down by how much?
$10,000.
$10,000, right? Now, we also agreed that we would owe the money to somebody, right? What type of an account is that?
Liability.
Liability, right? What are we going to call a liability? Have you had accounting before?
No. Debt.
Debt? I'll buy it. Usually it's called accounts payable, right? Because accounts payable is a short-term liability. So we come over here. How much is that liability?
$15,000.
$15,000. Did it go up or go down, that debt? It went up, right? So now we look at the net here. Net assets are equal to what now? 60 plus 15 is 75. Liabilities and equity are equal to 75. Right? Our accounting equation holds. Questions? Okay, number 3.
Craig.
Craig. Okay, Craig. So this was 1, this is 2, 3 coming up. Okay, Craig, 3. What are we doing?
Okay, we purchased inventory for 35 cash.
Okay.
We agreed to pay the balance in 30 days.
So we agree to owe someone the money. We're going to pay him in the short term. Right?
Okay. So your assets increased by 35.
Okay, what asset in particular?
Inventory.
Inventory, right? It increases by 35. Oops. No 0. Okay.
And also your accounts payable increases.
What type of an account is that?
Liability.
Liability went up by how much?
By the same amount.
35,000. So now total assets, 75 and 35, 110. As liabilities, 110. Right? Everybody with me? 4. Pay $2,000 for insurance policy.
Trevor.
How about Trev?
You lose $2,000 for assets.
Lose or gain?
You're paying $2,000.
Okay, so we're going to pay $2,000.
Yep.
So cash goes out the door to the tune of $2,000, right?
Yep.
Okay.
And then liabilities is $2,000.
Liabilities go down or go up?
Go down.
Why?
Because assets went up.
What did we buy? Did we buy something with value?
Yeah.
Okay. So when we buy something with value, what's that called?
Assets will go up too, then.
Okay. Asset goes up. What's that asset called?
Account.
What do we buy again?
Insurance.
Insurance. What's that asset called? Insurance.
Insurance.
We usually call it prepaid insurance. So, all right? Because now again, think about how insurance works. We're buying coverage over a certain period of time, and we're prepaying the first year's worth of coverage. So we usually call this prepaid insurance an asset account. So prepaid insurance increases by $2,000, but cash goes out the door to $2,000. But again, the net effect is the accounting equation balances. Right? Okay. I forgot to tell you one of the rules in this class. Anybody has a cell phone that goes off in my class, you have to bring in Coke Turbo in the next class. Beer will do, however. It's the night class. So that cell phone goes off. Know you're in deep trouble. Okay, just so you know.
So you can't resell or liquidate the insurance once you buy it.
You can perhaps get your money back, but you certainly can't. You probably can't resell it. I would agree. It's an asset because it gives value. Why does it give value?
Well, why does it give $2,000 in value?
That's the question, right?
Yeah.
Right. If it doesn't have value, why would firms buy it?
I mean, it could have less or more depending on if you need it or not.
Agreed.
Like car insurance doesn't give me value, for instance, because I don't crash a lot. But if I were to crash a lot, then it might give me value. So how do I determine that its value is not?
She's asking, actually, a very good question. Right? How do you determine the value of this asset? And the answer in accounting is very easy.
What you paid for it.
What you paid for it. Exactly right. So in accounting the value of any asset, what we record the value at is a very simple proposition. Simply what we paid for it. Now the value, like you say, could be higher or lower, right? We could buy a house that goes up in value immediately. We could buy assets that go up in value immediately. But on our books, we record it at the value for which we paid. And that's going to be one of the yardsticks that we're going to talk about a lot later. And so it's actually a very good point. Thank you very much. Okay. 7:50. Let's see. They're going to want me to get off the air pretty soon. We'll do one more. And so we'll do number 5 in class. We'll take a break. We'll come back. And Sikorsky, if there's anybody left after the break, we'll start you with number 6, just so you know it's coming. Okay, number 5. Trev, who's sitting to your left?
Srini.
Srini.
Yeah.
Okay, Srini. Now, Srini, I don't want to make you nervous, but this is really difficult. Really difficult.
Oh my God. I think the assets went down by 61,000 because they sold something.
Okay, wait a second. The fact that they sold something is going to be dealt with in number 6. All right. So you're thinking along the terms along you're thinking is reasonable. Okay, that when they sell something, something goes out the door. But we usually separate that into 2 different transactions, 2 different journal entries. One journal entry records the fact that we sold something. The other journal entry records the fact that we had to give something to our customer. Right? So the first question, so in other words, the first journal entry is the revenue side. The second journal entry is the expense side, the fact that we gave something up. So what I'm asking you to do is the revenue side, the fact that something came in.
Okay.
Okay?
They got an account receivable for $52,000.
Okay, so what type of account is an account receivable?
It's
an asset account. Increase or decrease?
Increase.
Increase. We increase an asset account called accounts receivable for $52,000. That's right.
And then their asset went up by 9,000 regard the cash.
Okay, another asset called cash went up by 9,000. Okay, so now you have a very nice asset side, but you have an entry that doesn't balance here, bud. What are you going to do?
Equity side.
The equity side, okay. Equity does what?
Common stock and net and then residual. I'm turning this side, I'm not turning the other side of it.
Yeah, sure. He took me serious. He thinks I'm going to hit him or something.
The retained earnings, I may be wrong.
You're exactly right. The account's actually called sales, or sales revenue. And it's an equity account. Why? Because it's part of retained earnings. You're exactly right. So it's actually a retained earnings type account. So over here, we're going to increase an equity account. Part of the retained earnings, called sales, we're going to increase it by how much?
61,000.
61,000. So you were right on the money. Question?
Retained earnings, like you said, was like the summation of a certain period of your net income minus your dividends paid out. Now you say your retained earnings increased by 61,000. If you want to say, like you said, the amount of dividends you pay out may vary. If you vary that, or if you decide to increase that because you have increased sales, that would be a separate transaction, a separate. That'd be like the next step.
Yeah. What's going to happen is, the higher our sales are, the more revenue goes up, right? But that's going to get offset by the fact that we had to sell something, which is going to be an expense. Plus, people like to get paid, salary expense. So the sales in isolation would increase net income. All our expenses would decrease net income. And so the net of all that stuff together is going to give us net income at the end of the year. Am I answering the question? Okay. Any other questions? We're going to take a 5-minute break. We'll let them change the tapes. And then we'll come back for a second session of fun and games in accounting. See you in 10.